Good morning, good morning, good morning. It is Wednesday, November the 8th, and a reminder today before you even get started trading today, from 3:40 in the morning, which was an hour ago, until the opening bell, 9, 10, 8, 8 plus 1, Fed speakers from all over the world that matters, let's say that. And at 9:15 in the morning, Jerome Powell speaks. ECB's Kazakhs just came out now and said, we can't exclude the possibility that further rate hikes may be needed. And the secret is nobody gives a shit. Charts are charts, data is data. We've now gone through 6, 8 gap ups in a row on the SPX. As you can see, range is very much starting to compress. Exhaustion is starting to hit. You have now tied almost your record going back to 2 years ago when the bull market completely ended back in November of 2021 as it rode up to the end of the year, start of 2022. 7 consecutive green closes, not closing above the open, closing above the previous day's close. This is why if you go in your spread room, you have your trade for today, which is closing below 43.7838, paying you, as you can see there in spreads, $2 at the moment for those of you that have Interactive Brokers. Over here at 3:56 p.m. yesterday, I was able to grab a screenshot, send it over as I was completely done being close to 5 o'clock in the morning with the message there, $ORRY. Sorry. Managing trades and managing anxiety are two completely different animals. This is why I run a hedge fund and my clients stay private. They've been with me for 15 years. I never, ever get bothered by them. Trades are trades. Anxiety is anxiety. And a lot of people were all freaking out. Oh, what do I do? Oh, I'm down big. Oh, yeah, I'm down big. Oh, God, I'm down big. And then again, here, just using what we were working with, I'll zoom in here. Remove these studies for a minute. And right here, same as what we had on Monday, 15 minutes before the close, boom, you got your drop. That 43.80, 43.75 went down to 25 cents. $3 entry, 25 cents. Wound up closing above where your break even is if you had the $3 credit. You lost 38 cents, 38 bucks. On this dip that happened here at 12:30, once again, many people were in the trade for $1.50, $2, $3. Drop down here to $1.50. Get a phone call from Elongate saying, dude, your people are freaking the fuck out. $1.50. So meaning to say you had $2 at risk, you just got $1.50 credit, and you decided, oh, fuck this shit. I'm going to go for it. And then as it floated up above you, you start to pucker your ass and go, oh my God, what the hell is going on? If you can't manage your anxiety, your size is wrong or the game you're playing is wrong. Many of you have done one-on-one calls with me. And many of you have heard me tell you about preserving your capital and keeping your trade size respectable. Not only because it's going to grow, it's going to compound, and you're going to minimize your risk, but because there's 3, 5, 6 even times in a year when you want access to that capital and you want to be able to go in fucking big. Just like Wesley Walker says, go big or go home. When we hit that 43.83.72, that was one of those times for me. One, happened many times during the course of the year. Many of you have been here for them. That was one. And that was the reason why I put the lot size of what I'm in on this, so that people could see how serious I am about this. You get overbought, you get oversold. It is what it is. When you are overbought the way that we are, trade is there. When you get oversold, that is when it's time to reassess. Where is this trade going? Where is it working? What has been broken? What needs to be done? And you can decide then whether or not you need to take your trade off. Same thing happened going into last week, how I was screaming and hollering and pounding the table that we were going to get a bounce. Bullish or bearish, didn't matter. We were getting a bounce. Israel decided to go into Gaza, made a decision, tell everybody, hey man, take trade off. We can go back in on Monday. We did that. We went back in on Monday. When we had the Fed FOMC meeting here a week ago, we had done a plethora of damage. Gotten all over to the overbought. Everything looked and appeared because, again, not only did your charts have you, but your data had you. And it all said the same thing. Take trade off. Get a chance, get back into it. Then we had this enormous gap up here on Thursday, a week ago tomorrow, and then the follow through on Friday. I'm looking at this from a Fibonacci count. That's all. Only structure I can see here is a 1, 2, AB, C being up here with the 150, right near that 43.84, right at 43.90, the 161.8 being there at 44.05. 100-day moving average right above there. 50-day moving average is proving that it is not to be broken. And more importantly now is your 5-day moving average. Because we have extended ourselves in a slower pace over the past few days, as the 5-day moving average moves up, you guys have played this game long enough. That is now your support. Whatever happens, your 5-day moving average is your support. That algorithm will come out there and fight for its life to get it. So I'm going to change the subject here for a minute and go back over here into the room. As you've got your trade there, 43.85, 43.80 calls for today, paying $2. And like here, over on the alerts, I'll get to elongate in a minute. I threw out here at 316, in the event of fuckery, your 0 DTE SPX 43.90 calls are down to 10 cents. Now, I did not do it correctly on the chart because that was at, I did, 315. These were down here at 10 cents. They ran up to 45 cents as you went into 20 minutes before the close. Now, we'll go look over here at elongate's 43.75s. Now, his entry was quite a bit earlier. Right over here, 229 at 70 cents because he was looking for a close down much lower, 229, something like that. Am I right? Yeah, 2:29 p.m. 2:29 p.m., somewhere around 70 cents, wherever it is. So let's just call it that. 70 cents. These only went to $4.90 here at the high. Doesn't show up on the chart, shows up here on the tag, and many of you saw there in the chat room that were freaking out at the end of the day. 43.80s went from 15 cents to $7. 43.85s from $1 to $8. These are the way that these work. 0 DTEs work like that. And again, if you don't know how to size correctly, you don't know how to manage anxiety or trade 0 DTEs, don't do it. That's why, again, there is a trade that I emailed out, which is not expiring tomorrow or Friday or next week, and is well within the price range of everybody being able to participate in. So again, here, looking at the structure of what it is and how We have run up 188 points this month, 282 points off the bottom, 6.88%. Let's zoom you out here. I used to use this when we were in the beginnings of this, and this is what we used for the video. And as you saw here on your drop down back in January, you know what? I'll zoom in even closer. You had your drop down in January, your 1, 2, and where did it run to? The 200, 223 extension right there. Then you had your bounce right off of here, boom, boom. And where did it run to? Right above the 100, just failing the 150 extension. Couple days later, you had your drop, bang. This is your Russia invading Ukraine bottom 41.15, which is what we just hit. And again, zooming out, looking at your bear bounces. Bang, bang, AB, and here was your C, right up between the 150 and the 161. Going back down and down and down, and here was your bounce back in May. 1, 2, 3, 4, failed fifth because it did look as if this was the bottom. Did not make it to the 200 extension. I didn't have the 161.8 because it ties right in. And we failed, and we dropped again down into the June lows. And here was our June lows. Once again, boom, boom, the big bounce in June up into that high over there into August, up to the 200 extension. Point being, where we're at right now, just in the simplified view, is right in that channel, right onto the upper side of it. Extended extremely. Come on over into what we want to see here. No, that's not you. It's this one. Where are you, SPX? Right here. Your SPX 1 hour running sell divergence has been going on here for better part of 3 days. Same thing over here on the NDX. Got a sell divergence, an even bigger one yesterday. Doesn't make a difference. Come over onto your 4 hour if you want to. Your 4 hour is notched up there, okay, at 97.88 on the NDX. You go back as far as you want to go back, and you go find that, and you go see what happened after that got up there in that level. I'll give you something easier to look at here. Here is your SPY, using SPY, not SPX, using SPY. Here's your SPY daily. RSI's up at 81. Full stochastics completely blown out. MACDs, not even bothering looking at them because of how destructive we got on that drop down to 409.21. Where is that 409.21? And you can see it clustering right across here, going across your resistance, your highs. But what I've tagged out is 437 so that you can see how that 437 worked. As you had resistance here back in 2021, you supported at the end of 2021 back over at the dip in November into the all-time highs. Fake breakout over in March, never came back to it until we got to it over here in June, and it took us a couple of days before we could break out up to the highs. Well, we resisted it all during October, and we're right back to it again. Come over on QQQ, and what we're looking at here is 365. 365 going across here, and looking at the weekly, no, weekly is not yet overbought. Was oversold. That was the reason we were calling for the big bounce. And here you are on the daily. Daily up to 82.87, 82.87 up on the daily. Here's your 365 line going across just in recent months, going to June, break, fallback, support, highs of the year, break, bounce back up, support, break, support, fail, resistance, break, boom. Here we are, back up above 365. So how you choose to be involved in this 9%, 31-point run up on the QQQ. The idea of getting short here on Wednesday was absolutely spectacular. The gap up on Wednesday night, Thursday morning, into the gap up on Friday, and now just hovering all week. all week hovering right above that minus 10% line at 367.84, hovering. 5-day moving average moving up, 100-day moving average up there, and all your other stuff, which doesn't really matter because nobody really gives a shit. And why am I even talking about this? Because people only want to know, what do I buy? What do I sell? When do I do it? And here is your IWM, and your IWM up 8.65% when it peaked and almost completely filling the Friday gap as it is the weakest link out there. So again, Jerome Powell is today. A whole bunch of Fed speakers are before him. I have zero clue what Jerome Powell is going to say if he says anything. All I can say is you have everything to your advantage, everything to your advantage to be looking at this being an exhausted top, and all that they need to do is to not break down below 42.50. As long as they don't break down below 42.50, the bulls still have a decent chance, and we'll review that once we get this dip and see where we're going. 7 green days in a row going into today, 8 over on the QQQ. You have your spread over there in the room. I'm exhausted. I've been listening to Wesley Walker Jr. quite a bit all day today, and yeah, he is the shit. See you guys in the chat room.
Delete this shit.